Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 25th August 2023, and joining Lee to pose some questions on the financial market themes for the week ahead is Jack Greenslade from the Global Customer Marketing Group. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Good afternoon, Lee. Happy Friday. How are you?
I'm good, thanks, Jack. How are you?
Yeah, very well, thank you. It's been quite a busy week for us, so looking forward to the long weekend now. So what's been the main point of focus for the FX markets over the past week?
Yeah, I think this week for the FX market, the same kind of trend has continued, where we've seen the dollar continue to rebound and strengthen over the past week. And we think kind of fundamentally there are kind of two main reasons. One is the increasing concern over growth outside of the US. So we've seen certainly during the summer period, increased market attention over the slowdown that's happening in China's economy.
Yeah.
And also this week as well, more focus has shifted back to weakness in the European economies, where we had the release of disappointing PMI surveys for August, which are pointing towards the increased risk of further contraction again in the third quarter for the Eurozone and UK economies. So that's certainly disappointing, and it's certainly making the dollar look relatively more attractive for obviously the ECB. It's made the market certainly weigh up more seriously whether the ECB will hike again at the September meeting. Our view has been that we think that the ECB will leave rates on hold in September, and obviously the weak PMI data we had this week supports our view. And at the moment, the market is pricing in, I think, about more of a 50-50 probability of another hike in September. So we still feel that there is room there for Eurozone yields and the euro to weaken further if the ECB keeps rates on hold next month. The second reason, obviously, why the dollar has also strengthened recently is also the resilience that we're seeing in the US economy. Obviously, in the first half of this year, the US economy grew by around 2.2% on an annualized basis, which is above many measures of trend growth in the US. And on top of that, the more recent data as well at the start of Q3, including the retail sales data, is pointing towards potentially even a pickup in growth in Q3. So that resilience of the US economy has put some upward pressure as well on US yields, which, when combined with the weaker growth we're seeing outside of the US, is just making the dollar look more attractive right now.
Okay, brilliant. And in the week ahead, what sort of key events and economic data releases are you looking out for?
Yeah, well, certainly this week is going to be important for data, not just from the US, but also the Eurozone as well. So we've just had the keynote speech from Fed Chair Powell at Jackson Hole, and by and large, he just repeated the messaging that we've had from the Fed at recent policy meetings, emphasizing very much that future policy decisions are going to be data dependent. And like I say, that makes the data that we have upcoming in the week ahead even more important ahead of the September FOMC meeting. Next week, we will see the release of the latest PCE deflator report from the US, and then quickly followed by the payrolls data as well at the end of next week. So that's going to be certainly very important for the Fed to finalize their expectations for the September FOMC meeting. Obviously, the recent trend has been that inflation in the US has been slowing, and we've also seen clear slowdown as well in employment growth. I think as long as those trends continue in the week ahead, then we were still comfortable with our view that the Fed will leave rates on hold in September. I think for the dollar, I don't think that significantly is a big negative. If we look at the US rate market pricing, there's only a very small probability of another hike in September. So either way, I don't think this is going to be a big market mover for the dollar. Like I say, we still think short term, the dollar can continue to rally, even if we do see further signs of softness in the US inflation and employment data next week. And then obviously in Europe as well, The ECB's decision for September is, like I say, a closer call, market pricing in around a 50-50 chance of a hike in September. So that we get the kind of final, really kind of important data release ahead of that meeting, which is the CPI data from Europe next week. Like I say, we're expecting the ECB to keep rates on hold in September. And for us to really change that view, I think you'd need to see a significant upside inflation surprise next week.
Mm-hmm. Okay, so given those releases and the current dynamics, what sort of trade ideas would you be recommending at the moment?
Yeah, well, we have had on a short euro-dollar position, but we've just closed that because the target was hit prior to Powell's Jackson Hole speech today. And in our latest FX Weekly, we'll be looking to put on more long dollar exposure, just switching that to against the Swedish krona. I think historically, Swedish krona is one of those G10 currencies which is more sensitive to weakening global growth expectations. With weaker growth in Europe and China, we still feel that the Swedish krona can weaken further from here and push dollar SEK back towards the highs that we saw late last year.
Great. Thanks a lot, Lee, and enjoy the long weekend.
Thank you, Jack. You too.
Thanks very much.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe, and contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.